best in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz, and don't know if you caught the recent presentation by our good friend Gordon T. Long and Charles Hugh Smith about the evolution of crony capitalism, and that is the system that we are working under. Most of us in the United States today, you're influenced by it, whether you're a crony capitalist or just Joe Sixpack, doesn't matter. It's affecting every aspect of your life now, and Gordon T. Long is with us now to talk about it. Gordon, welcome back.
Kerry, always a pleasure to be with you. Enjoy our conversations.
Likewise. And I just want you to briefly summarize that presentation, what crony capitalism is and how we got there.
I really enjoyed doing that tape with Charles. He's just a great person to brainstorm on the subject, and we've been talking about it for quite some time in how we expected crony capitalism to actually evolve and why it would evolve as more and more of our processes in the government are centralized, more centralized control, what it leads to, and what we have is we have a breakdown. We no longer, Kerry, to be really blunt, are living in a capitalist system. Capitalism has been dead in a large effect since about the dot-com implosion, and certainly since 2008. And you have to understand capitalism and how we've evolved to understand why we've ended up with crony capitalism and what it is. And that is, capitalism is at its simplest core is a free exchange between people that establishes price and value. Nobody buys something or takes something if they don't think they're getting value in somebody who's selling it or transacting it. So what happens when you have capitalism doing that is it creates wealth or it creates savings. Remember this word savings, Kerry? but the savings, and this is an important word here, because it's that creation that is then plowed back as an investment. And it's savings that goes into investment, which creates wealth. Sounds simple. But today, we don't have savings. We literally, not only as individuals do not save, we as a country do not save, we consume more than we produce, creates a problem. What we have now is a friend of mine, Richard Duncan, refers to it as creditism, and I think it's probably the best way of saying it, is we have a credit system instead of savings. And what happens is instead of the savings going to invest in, it goes to consumption. So we now have a 71% consumption economy in the United States, 71%. Most of the countries in the world, China's down at 35%. You're lucky the developed worlds are up in the 50. 71% of consumption is so high. And then if you look at the other 29% of it, a big chunk of it is government. And it's my opinion, you can't have more than 19% in government or the whole thing implodes. So and the net of this is that, Kerry, consumption takes away from savings. It subtracts from it. So we've ended up with insufficient capital. And everybody would say to me, well, Gord, that makes no sense. Look, there's lots of money, but money is no longer wealth because we're in a fiat system. When money could store its value, you could say that. And the whole idea of something called the money illusion, which I won't take people into, but we now live in a fiat world of negative real rates. And money illusion was when we have inflation. We have something even more serious. So if money is not wealth in a fiat system, we need to understand that liquidity is not credit nor debt. And you can't have debt or credit without collateral. And collateral is wealth. And that's the cycle that most people don't understand. And so what happens is, and to get back to the point on crony capitalism, why it evolves is with capitalism, you get more for less. So as this system implodes, and that's what's happening because of this lack of savings, the corporations themselves effectively have to deliver less for more. And how do you deliver less for more? Because aggregate demand slows as real disposable income shrinks. That's what's happening. More and more people are living off the government as the government takes a larger percent of the economy, which doesn't create wealth. So this implosion speeds up. So the only way for the for companies is they have to feed off the government. So they're actually forced into regulatory arbitrage, and they're forced into techniques that would allow them to get a bigger share of the money that's coming out of the market or out of the government. Because we used to have things like cartels and monopolies. Remember these kind of old worlds? And Kerry, what cartel was, you control price through supply, and monopoly, you control price through supply and demand. Well, crony capitalism is a version of that, where you control price by controlling regulatories and the enforcement of them. And so this is the shift. And it's been a long time since I did my MBA, but I cannot believe that the schools probably don't have major courses today on teaching. They'll probably call it government relations, a nice title, but teaching about how to take full advantage with lobbying and enforcement, regulatories, to help protect your moat. Warren Buffett calls it a moat that you want around your industry to protect the margins. A little long-winded, Kerry. I didn't have any questions in there, but that's the essence of our problem, and it's going right over everybody's head today. I guess because there's nobody incented to tell the story. Nobody's out there that's got a vested interest in, because it is that simple and it is that flawed.
Yeah, and a perfect example of the moat is when you refer to Warren Buffett. His railroad is the prime mover of petroleum out of North Dakota and the Bakken Shale. And a much more efficient way of doing that is the pipeline that they're trying to build that would be much safer and be capable of moving much larger amounts of oil out of North Dakota. And what's happening right now is that the Burlington Northern Railroad, which Berkshire Hathaway is the sole owner of, is backed up thousands of rail cars, both for grain and for petroleum. And talk about a moat, there is no other way to move that oil out of the Bakken Shale because there's no pipeline. And in order to build the pipeline, how do you get that? How can you build the pipeline? You got to get government approval. And thus far, government approval has not been forthcoming. And some say, and I don't know if it's true or not, that due to Mr. Buffett's close relations with the current occupant and the current administration, they're not going to get the approval to build that pipeline, right?
Kerry, I feel like we've come full circle since the Gilded Age, when, we're talking about railroads and oil, when Rockefeller, John D., created his fortune by controlling the whole supply chain from when the oil came out of the ground until at his gas station. His real leverage was when he took over the monopoly of the transport of the oil using oil cars. And we all know the story that we had to have monopolies to stop it. But now we got a different version of this same thing of controlling price through supply and demand. And now it's using the government didn't have as much say. To bring in the antitrust laws back then was a huge, massive civil and social unrest that went through it. I mean, a presidential election was fought over it. But today we got the same magnitude of problem, but no discussion. And now it's crony capitalism, where to make your margins, you have to have the government's say. So then you get into, or the enforcement side of it. So then you get into, well, how do you influence government? And that's I guess, why do we have 50,000 lawyers on the Beltway in Washington? I mean, what can they possibly be doing? Mm-hmm. And it's a complicated kind of discussion. The lobbyists are there influencing politicians, and who are the politicians? Well, they pass regulatories and one thing or another that really effectively influences whether the party or the political appointments or regulators who then sort of curry favor with the crony capitalists. There's no money that's necessarily transferred in here in that part of the equation, but there's regulatories that give you an advantage that shift. And if you can steer those, and if you can stop your competition, you can increase your gross margin, and to a large extent today, stay alive and survive, because aggregate demand continues to shrink as the debt payments consume more and more of our wealth. That's what we're really doing. It's like the old days of the farmer. My grandfather was a farmer, and he used to say all the time, you can't eat tomorrow's seed corn. You got to keep some corn in the granary, or we can't grow a crop next year. Well, we've eaten all the seed corn in the granary, and we're sitting around fat and lazy, expecting somebody else to plant the crop for us. I mean, that is, America consumes more than it produces, and we've talked about that before.
Yeah.
But your crony capitalism is preordained once you start to consume this level, and the government becomes such a big part of the bleed. There's no other way you can operate as a corporation effectively. Where's your growth? I mean, there's exceptions, of course there is, but then you get into why take the risk. And you and I were just talking briefly, and I talked about it in that tape. Is look at the risk today. In investing. When Rockefeller and Carnegie and he made their fortunes, they bet their life. They bet everything, the money that they had in the wealth, on their idea, whether they were using a monopoly or whatever. They took massive risk. It resulted in massive fortunes and massive new employment for people. Corporations do not take that risk anymore, Kerry. They stay away from it. And the example I gave in the tape, and it's one that's personal to me, earlier in my career, not that many years ago, I had 85% of next year's revenue still on the design board, 85%. So just think of what the competition could do. What happened if the life cycle shortened? What happened if the margins changed? What happened if the product was late or didn't work or was obsolete time you came out? You had a gun to your head, and you were betting on we had $20-30 million on the line on these projects. Well, why would a board want to take that kind of risk? Well, we had competition, and so we were competing to make money. Well, today, all of a sudden, it's easier to do financial engineering down below the line, below the non-operating line, off balance sheet, collateral, contingent liabilities, securitization. On the top line, for growth that they can't get, let somebody else take the risk. And let them take, and so the ones that survive's got a product, you whistle in and you say, I'll buy you. You don't, of course, Kerry, you don't give them cash. You print up more your inflated stocks over at your local printer, and you hand them the stocks. And they say, great, look at how much I'm worth. So who's the fool in this game? But you end up with the assets. And so no
Amazing.
Risk.
Amazing.
So how does capitalism survive?
Good question.
It hasn't.
Good question. And we need to talk about what you can do about it, how you can fight crony capitalism, both on the individual basis, you as an individual, what you do to protect yourself against crony capitalism, and societally, what all of us can do, you and I, to fight this movement that has really taken all of us out and really has given us a top-down command control economy. And up next, we'll be talking about it on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week, the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
And in case you're just joining us, we're speaking with Gordon T. Long. He just put together a masterful presentation along with our good friend Charles Hugh Smith about the evolution of crony capitalism in the United States. And now Gordon and I are going to talk about solutions, what you do to protect your wealth, your family, your savings from what really is a cannibalistic economic system that really, it's kind of like that episode in Star Trek where this I guess it was a spaceship that just consumed universes and kind of spit them out. That's what crony capitalism is really like. And that's why you need to prepare for it, because it just consumes wealth and transfers it and destroys it. And right, Gordon, you need to kind of prepare for this, right?
Very much so, without question. Kerry, I don't want to sound like when I say crony capitalism that I'm some conspiracy kind of person. I'm not. I'm an economist, and we went through just the whole evolution of why this would happen and anticipated and wrote papers on it 3 and 4 years ago. It's a logical step that are going to unfold. Now, what it means for an investor is the best time to invest is where the road map in front of you is very, very clear. Even if it's a bad road map and you don't like it, at least you know that that's the road that we're going down. And when you get the level of crony capitalism, as we just talked about, happening, and with less and less savings available, and the government becoming so much larger as it centralizes, and by the way, as problems evolve, and they get bigger, they need more money to solve their problems. They have bigger debt structures that they can't finance, et cetera. So what it means is you're going to see an accelerated debasement of the currency. And that is simple. I mean, we're ending quantitative easing. Kerry, I'll bet any amount of money that maybe we're going to increase the Federal Reserve's balance sheet within the next 12 months. It won't be called quantitative easing. They'll have some other glorious name and spin on it. But effectively what we're going to do is we're just going to continue to print money. Now, when money is printed, what it means is effectively you're going to get less and less for more and more of those dollars in your pocket. So how do you protect yourself from what I'm going to call this debasement? And the Austrian school, which is probably, not that I'm a hard Austrian, but they were the only ones that really understood credit and money and what it was. Now, this was pre-fiat currency, but they're very, very clear in how to protect yourself. And you get into concepts like the indirect exchange, but basically you need to move your money into things that are a real wealth and can be a store of that wealth. And as I think in one other show with you, Kerry, wealth to me today is stored in free discounted cash flow. So something that actually will create free cash flow in a discounted basis and discount basis on the erosion of the value of the money. So what are those things? Gold and silver, hard assets, absolutely great stores. Don't make you money, but it stores your value. I have some serious reservations in that. I expect the government to tax those severely, but you still, if you do it right, still will be probably safer. But you need to look at those kinds of investments. And I think we talked about it once before. Those investments, to me, are becoming more and more local investments, where you can see and feel where the money, your investment, your hard-earned money is ending up. They don't have to be big operations. They can be small loans. They can be small stores. They can be various levels of enterprises, small farmers, small businesses, often dirty industries, frankly, where they've had to sell because their father is retiring. The kids don't want any part of the business, but it's a very profitable, but nobody's going to run it, and they've got to sell it. And the person who could probably run it doesn't have the education or background, according to the bankers, to fund it, nor can he draw upon it. So the business is kind of almost self-implode. There's all sorts of them in America. Kerry, that's what built America. So it's going more locally, in my opinion, and that's the stage that we're in to begin to fight it. I personally believe the securities industry, whether stocks or bonds, has never been more risky than it is right now.
Yeah. Yep. I agree with you there. It could go up for a while longer, but eventually, at some point, it's not going to be pleasant there.
Kerry, you made a really good point, and I didn't say I thought the market was going to crash when I said I don't trust the securities business. I do believe near term we're going to see a correction, but in actual fact, as we print more and more money, stocks are already disconnected from reality. They don't match fundamentals and haven't for at least a year and a half. and they're so overinflated, it's absurd. But that does not mean that they're not going to continue to go up, because around the world, and as people look for ways to, as I just said, put your money into assets, they're looking at these Fortune 500 stocks and they're saying, look, I know they're inflated, but they own real bricks and mortar and they have a real market space. And even on a discounted basis, and I don't believe they'll sustain the dividends, my money may be safer parked there than basically being stolen or taken from me in a banking collapse, in a bail-in, or confiscated, or just simply debased or taxed out of existence. Because there's no, unless I give it to the bank at 1%, there's no place that people have to store. So stocks suddenly might be an alternative. And you could see, for all the wrong reasons, but become I'll call it a Minsky melt-up. You could strongly see that going into next year. But it's a fool's game, and it will implode at some point. But how long that runs, time will tell.
Yeah. So investing locally in things you can see and touch, in businesses that you can actually go down to that store or factory or warehouse or whatever and watch the business actually run and gain an understanding of it.
Exactly. And a point on this too, Kerry, when I say locally in a small business, we need to understand that the internet itself has revolutionized the world. We all know that, but people are starting internet businesses. We saw with eBay and these kinds of things, but there's so many business models that people are creatively coming up with how to sell product and services or be part of it, whether it's software development or whatever, on the internet. And these are not high-tech applications. They're people really understanding a particular business. It could be a craft that they know. It could be that they're into the insurance business or education. And they're using that internet to really, with certain models, to gain wealth and to grow a business, whether a few people. They need capital. They need money. And that's a local business who's operating globally. And they're there. You'd be amazed when I just trip over them all the time. And somebody, who's in this building? And you go inside and you find 7 people writing code. And and they've got a business model. Who are you writing code for? Well, a company out of Dubai. Well, who are they doing it for? Well, they're doing it for a corporation in South Africa. How'd you get the contract? Well, we were on the internet. Boom, 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 boom.
Yeah.
And so, and well, who's funding them? Well, they're not going. The venture capitalists don't want to touch them. Well, they got angels. Some local guys have funded us. And so, are you one of the local guys? But the explosion of the internet is so prevalent and so massive. But there aren't investors, there aren't venture capitalists are only on the big ones. And by the way, most of these big ones, 44% of them are losing more money than pre-IPOs. I don't know if there's such moneymakers as these smaller ones that then get taken out in that risk equation I talked about.
Sure.
And where the money can be made there.
Yeah. So you just have to go look around in these companies in any state, any city, any town. You think they're there to be had, huh?
Everywhere. They're absolutely everywhere. And the kids today, especially with the tablets and the iPhones and the smartphones, and the kids being so much more technologically literate, are naturally thinking of things to do. But a lot of them, it takes one leader to actually organize them, and they don't have enough money because they got to live. But the funding there can really turn out to be potentially a big winner for you. If you may not need to know the technology, but if you know the application, the industry that it's in or what it's trying to do, and you can bring a lot of talent to these younger people, and be complementary and be part of it. I think this is the new world that we're moving to, Kerry. It's a different world than, I got to go work for a big corporation, or I got to go get an annual salary. We're going to be more businesses where we're taking risk. We're innovative. All these buzzwords, but they're real words today in real environments.
Yeah,
and so we can say that glass is half empty, or we can say the glass is half full. Yeah. You just got to look around.
And for the local businesses, the crony capitalist economy doesn't exist. They really are involved in competition. Gordon, we got to go now. Just tell us where we find your work, and particularly where we find your piece on crony capitalism.
Thank you very much, Kerry. My site is GordonTLong.com, and the Crony Capitalism is under Macro Analytics, a YouTube channel we have under my name, and it's posted there and on my site. And I encourage everybody to. It's a great tape. Charles and I had a lot of fun doing it.
And it's highly worth your time, highly valuable piece of work that you really need to take a look at. Just go over to financialsurvivalnetwork.com, click the link in the show notes to this interview, and make sure you sign up for our free newsletter. And while you're at it, we got a free webinar going on September 24th at 9 p.m. Eastern Time. So sign up for that while you're at it. Gordon, we will talk with you again very soon. Thanks so much for being on.
Pleasure. Thank you very much, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.